What's up everyone? Welcome back to my channel. Welcome back to a brand new video. I hope you guys are doing great. I hope you're having an amazing day. In today's video, as you read the title, I'm going to share with you a very cool day trading strategy. So if you're interested, make sure to stick till the end to get the most value out of this video. But before we start, make sure you're subscribed to the channel to not miss out on future uploads. Feel free to share and like the video. And if you have any questions, please drop them down below. I always make sure to reply to every single one of you. Also, feel free to join my free signal group on Telegram. I send daily signals over there and it's literally for free. You can do that by clicking the link down below. And if you want to learn my strategies or book a one-on-one session with me, you can do that by DMing me privately on Telegram. You will have my Telegram username link down below as well. Okay, so let's get into the strategy. For this video example, I'm going to use AUD/USD on the 15-minute time frame. This will be our time frame since it's a day trading strategy. But what I can tell you is that you can use this strategy on higher time frames like the H4, like the H2, like the H1, even on the 5-minute. I would say the 1-minute could be too noisy, but even for scalping, this strategy could be good. But for this video, since I said it's a day trading strategy, we are going to stay on the 15-minute time frame. Okay, but of course, after you watch the video, go and backtest it yourself, get the hang of it. You can try it on different time frames to suit your style, and yeah, just give it a backtest. Okay, so all we need for this strategy is two indicators. We need the 200 EMA. We go here, we click EMA, moving average exponential. We click on it. We click its settings. We select 200, and that's pretty much it for the length. And then you search for the MACD. Okay, moving average, convergence, divergence. You add it to your chart, and all you have to do is click the settings. We leave the inputs as default, and on style, just disable MACD, signal, and zero line. Okay, that's all you have to do, right? And after this, we are all set. So now, what are the rules for us to enter? First things first, we enter sell positions if we are below the 200 EMA, and we enter buy positions if we are above the 200 EMA. If the price is on the 200 EMA, like we see here, we don't take any trades. If the 200 EMA sits in the middle and price, let's say this is the 200 EMA, okay, and it's flat, and we see the price consolidating like this, we do not trade at all. We just wait for the market to pick a side, and then we will start looking for setups. Okay, so we do not trade consolidations. If we see the 200 EMA flat and the price going above and below it constantly, we just don't trade for a period of time. Okay, it can be a couple of hours, it can be even more than a day. Okay, we just need to wait. So these are the rules. Now, how do we look for entries? Well, after we know, okay, we are above or below the 200 EMA, then we are going to look for a MACD divergence. Also, for the people that do not have time to trade Forex every single day or still struggle being profitable while trading Forex, but still want to get setups like this, I highly recommend you check out my free signal group on Telegram. The link is down below. This setup was literally sent today. It was a buy limit pending order. All we do is send pending orders, because like this, every single one of you will be able to make profits from the signals. And this one was sent in the VIP. Of course, if you want to upgrade to the VIP, where we do VIP live weekly coaching sessions every single week, you can do that from the free signal group. Okay, enjoy and thank me later. On the histogram, and then our entry signal is going to be a crossover of the MACD. Okay, so when we see the crossover in this scenario is right here, that's when we will enter the sell position. The stop loss will be above the swing high that we entered, and the take profit will be 1 to 2 risk to reward. Okay, so the rules are very simple, and I'm just going to use current market structure for some backtesting. Okay, as I always say, you guys already know that I always like to use current market structure as backtesting to be as real as possible and not go back in time to show you guys 5 wins in a row and claim that this is the 100% win rate strategy, because it doesn't exist. Something like that will never exist. Okay, so I'm being 100% real. You will get losses with these strategies as well, and you can expect a win rate of, I would say, 55%, maybe 60% in some good days. Okay, so a even a 50% win rate with a 1 to 2 risk to reward strategy is amazing. Okay, so expect losses as well, but since it's a 1 to 2 risk to reward, overall you should be profitable if you use a proper risk management. Okay, so let's just start the backtest. So here I'm gonna use the bar replay as well. As we can see, we created a high and a higher high on the chart, whereas the MACD started to create a divergence. Okay, so it's very clear to see that we created a higher high, whereas on the MACD we created a divergence. All right, so after we see this, we know that we are below the 200 EMA, so we can look for a sell setup. Now all we need to wait for is a crossover of the MACD, but we have to wait for the candle to close as a crossover. Okay, so is this a crossover? Yep, this is the crossover. We can see a very small red point on the MACD. So this is exactly when we enter our trade after this candle closes. The stop loss will be right above the swing high, and the take profit will be 1 to 2 risk to reward. Okay, but this trade didn't close yet. As you can see, it's in profit. It's running in profit, but this is live market. So let's just scroll back and look for some more setups. Okay. This kind of looks like a, yeah, this looks like a divergence as well, since I'm looking more for the candle closures and not the wicks. Yes, you can consider this a high, but I really like to look for candle closures. Okay, so as you can see, here we have a high, here we have a high, and here we have another high. And as you can see, this, I mean, oh, sorry, I wanted to say that we also count if, let's say, a candle closure, a full body, is below a wick, that still means that the wick is also forming structure. Okay, so to easily check that, we can use the line chart as well. But the line chart, I think, no, I don't think we can use the line chart actually, because the line chart, yeah, the line chart won't actually show us the wicks. It's only going to show us the body candles. And what I wanted to say is that we take wicks into consideration as well. Okay, so that's what I meant, since it's also structure. Okay, so here what do we have? We have high and the lower high, but on the MACD we have a higher and a higher high, so we created a divergence. Of course, if this seems a bit iffy for you, then you can just not take it. Okay, there's gonna be a lot more clearer setups than this one, but the divergence can be seen. Now all we wait for is the MACD crossover, and we have it right here. We enter a sell position right here. We place the stop loss right here, and we aim for a 1 to 2 risk to reward ratio. Oh, sorry, which is going to be right here. And we just wait to see how it plays out. And this one would be a win, I think. Yeah, this one would have been a win. Let's just scroll the market to see some more examples here. Look, yes, we can say that we have a divergence from this high to this high. The market moved higher, whereas on the histogram it actually moved a bit lower. But since we are on the 200 EMA, we won't take the signal. Okay, here the same exact thing. When we see this, look, exactly what I was talking about. When we see the 200 EMA flat and we see price consolidating on it, we just don't trade. Okay, we just wait for the market to pick a side like it did here, and then we can start looking for entries again. All right. Let's see if I can actually see a setup here. Nope, not really. Not really. I cannot see anything. Let's scroll. Oh, we might have a buy setup here since we are above. And yep, we do have our buy setup. Okay, so let's just use the bar replay for this one as well. So it's very clear to see that we created a lower low on the chart, but on the MACD we created what? A higher low. Okay, so the divergence is created. Now all we need to wait for is the crossover on the MACD. Okay, so let's wait to see when we get it. Not yet. Yeah, this is the crossover. It's very small, as you can see, but it counts no matter how small that pinch is. So we enter the buy right here with the stop loss right below the swing low, and we aim for 1 to 2 again, also pretty close to our stop loss, but it hit take profit. Let's see if I can find another example. This price right here was pretty, yeah, this was pretty regular. Again, this is no trading zone. Okay, very simple. Again here, if we see the EMA being touched, I don't care if we get a divergence. Yeah, this might have been a divergence and a possible win since it crossed over here, but I do not care. We just stick to our rules. Again, the same exact thing here as well. We don't trade. Here we have lower highs, higher highs, and the MACD is showing the exact same thing. So we don't have any divergence. I'm gonna just look for one more setup before ending the video because you guys already understood what this strategy is about. I think we got a new setup. Yep, we do have a new setup. Okay, so let's just use the bar replay again. And as we can see, we created a higher high on the chart. Very clear to see. Oh, sorry. We created a higher high, whereas on the MACD, we created a higher low. Okay, so the divergence is clear to see. Now, all we need to wait for is a crossover on the MACD, and we can enter the sell order. Oh, not yet. Oh, this is our. Before I continue with the video, guys, if you are looking for a broker to trade Forex with, indices or crypto, I highly recommend Trader. You can sign up with them by clicking the link down in my video description. This is the broker that I am currently using. I had no issues with it. They offer spreads as low as 0 pips. They have different account types, leverage up to 500, and their customer support is amazing. They have credit card withdrawals and deposits. Everything is very professional about them, so that's why I highly recommend you guys to check them out. Okay, so link is down below. Feel free to sign up with Trader. Sell signal. Our stop loss is going to be pretty big, but we just keep the rules. We respect them and we go forward. So 1 to 2 is going to be right here. And now let's just play the market to see how this would have played out. And yeah, our take profit would have been slightly touched. And then the price just retraced. So on some accounts this could have been a loss, I'm not gonna lie, because of the broker spreads, but it kind of pinched it by a bit. So 595, 592, half of a pip. So yeah, if you have a broker with like raw spreads like 2-3 points, this would have been a take profit. But if you have a broker with bigger spreads, then this might have missed your take profit and then it would have hit your stop loss. But as I said, don't expect this to be 100%. As I said, you will have a 55%, maybe 60% win rate in some good weeks. But overall, this strategy is profitable if used correctly. Okay, I showed you some few examples, literally from current market action. Okay, I didn't went back 3 years ago to pick some really good entries. This is literally live market. Okay, so you guys understood the rules. All we need to look for is, are we below or above the 200 EMA to establish whether we look for sell and buy orders. If the 200 is flat and we see consolidation on the 200, we just avoid trading. And if we see a clear trend below or above the 200, all we need to look for is a histogram divergence on the MACD. and then we enter on the MACD crossover when the candle closes. We enter, stop loss above the swing high or below the swing low, and take profit is always 1 to 2. Okay, so the rules are very simple. What can I say? Just go ahead, backtest it, then trade it on a demo for a while till you get very, very consistent with it. And then, of course, you can trade it on your live account if you want to, but please use proper risk. And yeah, you know how to manage your risk on your own. It's up to everyone to manage their own risk. Everyone has a different risk appetite, but to be honest, I always suggest people to risk not more than 2 or 3% per trade. Okay, and once you decide that, just stick to it. Okay, don't change it, because that's what's going to help you achieve consistency. Okay, so yeah, that being said, guys, feel free to test it on other time frames as well. If you want to be a swing trader and if you want to spend less time on the charts, then I would probably make a video with this exact strategy on a higher time frame. But it's pretty much the same. Okay, so just go ahead and test it, see which time frames you like most. And if you have questions, please drop them down below. I'll make sure to clarify everything. And yeah, this was pretty much it for today's video. I really hope you guys enjoyed this strategy. If you did, please smash that like button. And like always, I will see you in the next video. Goodbye.